Yeah, I'm losing my
So let's apply
edge.
some alchemy to metals trading, Michael. Get deep into it. We've got a metals product here at the small exchange. It's called Small Metals. Ticker is SPRE. It's a futures product that's got a margin of just a couple $100, and it's going to let you trade silver, gold, and platinum. Which it's been an interesting year for these three young metals. You've got silver outperforming gold vastly to start the year. And then as metals start to uptick, silver takes over everything. And it's at its highest was double where gold was on the year. And then you've got platinum, which is just not taking part in any of the rally, is barely positive at any point this year. Yeah, it's been an intriguing back and forth here for metals. And it's one of these things where trading silver against gold, the gold, looking at the gold silver ratio, we're looking at silver platinum is another big trade. That's a great next step. That's top level alchemist. That is after you've gone to alchemy school for undergrad and now you're getting your PhD in alchemy. Here you're trading those spreads. But what's nice is we basketed all of those three markets together, so you have a place to start out. So you don't have to choose, if in March here you see the volatility in metals to the downside, Michael, and you say to yourself, I want to get some long metals exposure, and you are presented with these three options, you've gotten very different performance here since then, and you have to research why you make that decision. After the fact, if you chose platinum, you're kicking yourself because platinum is only, up 10 or 20% from those lows, whereas silver has almost doubled in price. Actually, I think it more than doubled in price off of those lows. And so, we created this one thing that's 66% gold, 27% silver, 7% platinum. And why are those weightings the way that they are, Michael? You're a big index construction guy. Can you give us spill the tea on this?
Sure. So we talk about an economic use case for our product. And when we look at these three metals, most people will generally start with gold, then they'll maybe pick up some silver. It's actually kind of a sleeper metal. It moves on a lot more than gold, although it's referenced less often. And then platinum typically is the most volatile component. That's why it's the smallest section of this index. But what we did when we built the small precious metals, we looked at global production, domestic consumption, and notional volume traded as the three factors to weight these precious metals. So what you get is an index that's both useful for commercial applications, talk about metal fabrication companies or mining companies, producing companies, et cetera, useful for them, but also interesting for retail traders like you and me who want some exposure to gold because it's the largest, most prominent precious metal, but also want a little bit of the volatility of silver and platinum. So you have a product that moves around and presents some back and forth trading opportunities.
Absolutely, man. That was very well put. I mean, at my simple mind, I just kind of chalk it up to all right, what's the most relevant metals right now? And gold is the first most relevant, and silver then after that, and platinum the least relevant. And the weightings are, they dictate that hierarchy within the metals industry there. But yeah, thank you for all of that information. And it gets us, Michael, the SPRE trade here, which as you can see, looks a lot like gold. You've got gold in the purple here, and that yellow is almost kind of right on top of it there for a lot of it. But you see early part of the year that silver dragging SPRE lower than gold, and then later part of the year that silver bringing SPRE higher than gold. And so it creates this first stop on your trip to metals trading here, going as far as you possibly can with options and pairs and all that good stuff. And this is the jumping off point that I want to start with, Michael, when we start talking now about the alchemy factor here, because depending on your opinion, now you started with SPRE, you can make so many different trades, even with just these three markets here, Michael. Like, say you want to be long metals, but now you want to turn that small precious metals trade into something slightly different. That's what we're kicking that alchemy in there, Michael. We're turning, gold, silver, and platinum into something slightly different there. You can turn that long trade into whatever you want. You could turn a short SPRE trade into whatever you want. It's a matter of starting with an overarching opinion on the metals industry, the metals sector here, and then taking out one of these pieces or using one of these pieces to under hedge that opinion or over hedge that opinion, depending on timing. I mean, we got a bunch of different permutations here relative to gold, silver, and platinum using shares, futures. You could use larger futures contracts. You could use options on futures and options on these shares as well.
Yeah, and this is really where the creativity aspect of trading and financial markets actually comes into play. And just to elaborate a little bit about what we're looking at here, this is just a screenshot from the new Small Exchange subscriber newsletter full of fantastic, concise, quantitative information, such as this little plug for Frank there. But
no, that's a good plug for the exchange. You're very integral in it as well, Michael.
Dissecting these three rows, we're starting with the correlation between the small precious metals and outright gold, outright silver, and outright platinum. And to interpret these numbers, correlation is a range between -1 and 1. The closer it is to 1, the more positive the relationship between precious metals and gold. So with gold as the largest component in SPRE, you'd expect it has the highest correlation to gold, which it does. And the beauty in that is there's some opportunity between those related products. You wouldn't want to trade SPRE versus maybe oil probably has a pretty null correlation. There's no pairs trading opportunity there. But because it's highly related to gold, you can trade it against that second row, about 50 shares of GLD, probably the most popular ETF for a lot of new traders looking at precious metals, or for more advanced traders against 3 MGC, which is a micro gold future. And you can move across the columns there. So if you want long precious metals exposure and you want to hedge out that gold component, you can use these numbers as a reference point to remove the gold exposure out of that product if you wanted more holistic silver or more direct platinum, for example.
Amazing. I'm so glad that you ran through all of those things. That's perfect, because now we're going to jump right off into a few of our Alchemy trading ideas. If you wanted to be long SPRE and you wanted to hedge out that silver piece, Michael, and so why would you buy SPRE and sell silver? Well, let's get back to this chart for a second. Mm-hmm. Silver is the outperformer on the year, and SPRE is underperforming that. And just like at the start of the year, you would have profited from selling the metals and buying silver against it, the weaker one. Now the potential could be to buying the metals and then selling silver, the outperforming one now. So we're looking at a few different trades that, like you said, you just ran down so beautifully, Michael, makes use of shares, makes use of futures, and makes use of options as well. And these aren't even all the different types, because you also, I didn't even bring into account options on futures, which you can do with the options on the /SI market. So there's even more permutations, and this is only one of these columns here. So let's get into it. Michael, if you wanted to hedge 100% using shares, which isn't the most efficient, but it's the most comfortable for a lot of people, you look at a long SPRE contract and short 350 shares of SLV. If you wanted to hedge, let's say 30% of the long SPRE trade with futures there, you look at the /SIL. If you wanted to hedge 10% of this trade with options, Michael, you could look at a 35 delta call in SLV. And I think this is probably the most intriguing to a lot of people. So let's hold here for most of this conversation. And this is what's beautiful about this, is using options on an ETF or options on a futures, Michael, to hedge isn't a matter of, with the outrights, it's usually like, okay, I buy the one thing and I sell the other thing and that's my trade. There's so many different variables with the options on ETFs and futures. And that's why it's this thing that once you get kind of on the level of options, people love it because it's like, I can do a million different things. So here you're hedging out 10% of your SPRE exposure with the 35 delta SLV call. But guess what? If you sell, you could sell a 20 delta call and just hedge out close to 5%. You could go to the 50 delta calls in SLV and sell, let me just see if I can do my math right here. If I sold maybe 4 of those 50 delta calls, I'm short 200 deltas. I'm more than 50% hedged now in my my SPRE position. There's a ton of different stuff to do there And I think that that's probably the best first place for people to go is,
Mhm.
one contract in SPRE and then one options or a couple of options in something like SLV. Or from the short side here, you could do it with GLD, a very, like you said, Michael, very popular ETF and options market as well.
Yeah, exactly. And both of these underlying ETFs, SLV and GLD, and even the options on the mini futures, they're extremely liquid. So there's a ton of opportunity in strike selection and choosing which scale in terms of hedge percentage you want to be in the different strike that you select. So basically, Frank, if you could just elaborate a little bit, we say 10% hedged with options. So
Mm.
you're short SPRE, and then
Yep.
you're short to GLD put. What do you mean by not 100%? How can you be a certain percentage hedged,
Sure.
or what is your directional price metric?
So yeah, so this would, once again, Hart, I'm glad you asked, because it goes back to where we started, right? Which is, starting up here with SPRE. Do I want to be long or short metals? That's the initial idea. And then everything after that is a small tweak on, given historical price action, or just given what your opinion is moving forward. Maybe you think platinum, oh, it's the weakest one. I think it's going to be the weakest metal for a long time. And while I want to be long metals and add that exposure to my portfolio, I think platinum is going to continue to outperform. So that's a small tweak based off of your opinion. And so, yeah, what you do when you hedge or when you tweak these things, you manage risk, Michael, is you tend to not go. The last thing you want to do is hedge 150%, right?
Mhm.
Like, once you over hedge that initial idea, you've taken yourself out of that trade. Like if I wanted to be short metals here and then I went to GLD options and I sold, 10, 30 delta puts. Now I'm long gold. I'm more long gold than I am short metals. And now I'm actually long metals because I over hedged. And so, yeah, this is one of those things that this percentage that you bring up, Michael, is just another one of the parameters that you can tweak. And it seems like, oh, it's a chore. It's another thing I have to figure out. No, it's just a matter of having that initial idea, deciding how much you want to hedge, and then employing one of these different routes that you can. And that gets you to your alchemy and metals trading.